catch of the day. That was the trade I took yesterday, 1 ratio 28 trade thereabout. So looking from a daily perspective, I was expecting price to pull up to this point of interest I have over here. This point of interest doesn't necessarily mean anything could happen here. I'm just interested in seeing price's reaction when it gets here. Alright, so just have that at the back of your mind. A POI doesn't mean you must trade from that POI. You're only interested in that region. So jumping down to what trend we're in was determined by the most recent breakup structure. So I determined we're in an uptrend, so my bias would be more of the buys instead of the sells. I could be getting into short-term sells, but overall I was looking to buy. Okay, then we jump down to the 4-hour time frame, try to identify the most recent break of market structure, which was this push. Well, right now it's this push, but as of yesterday when I took the trade, it was still this push, and we saw price pulling back down. Right, today is a Tuesday. The trade I took was on a Monday. I'll drop a screenshot somewhere. It should be up on your screen where we entered from. So what we are concentrating on right now is this move. How was I able to capitalize on this move right here? Like I said, I was looking for price to buy into this point of interest here, so my bias was automatically favoring the buys. I wasn't looking to stop here. I was actually looking to stop here, but I'm seeing price's reaction around here, right? So I'm pro trend on this trade. So now looking at the kind of move we had yesterday, we saw price pulling back into the zone. Now next question is why did I pick this as a point of interest? Well, the truth is I had more than one point of interest. I had about 3 points of interest, or 3 structural areas that I was considering, or 3 points in the market I was considering. This happened to be the first, and when I saw the confluences that came in, I was able to enter on this trade. So what were those confluences we're looking at? Let's go to my favorite intraday time frame, which is the 15-minute time frame. So first of all, I was able to understand what was happening in the market. So last week, this was a Monday. You can see my day divider. It's very faint, but this dotted line. So on a Friday, price created a double top, right? This was a Friday. So prices on Friday, and if you scroll back in time, you'd be able to see that this was an equal high that formed in the market over here. Let me go ahead and mark that out. So what I was expecting was for this liquidity that had been generated here already. It was almost a triple top. This was the first. This didn't quite touch that line, and then this was the third. So I was expecting for price to take out this liquidity before probably reversing to the downside. Then fast forward to the Asian session. This is this blue box, this blue box you see over here with an orange line in the center. This was the Asian session. During the Asian session, I saw a lot of liquidity being engineered. So a lot of people trying to get these sales, and there was liquidity, trendline liquidity basically. More of this I explained in depth in our course and our inner circle course. So just if you don't understand what I'm saying, try to just follow through, and you can ask questions as much as you can, and I'll be answering as many as possible. So we saw the London Open take out most of this liquidity and then proceeded to drop even further. And somewhere around 1 p.m., which was the time frame for the New York Open, that was when price was approaching this point of interest I had over here. Now, it wasn't a 15-minute point of interest, but I guess when I dropped down to the 3 minutes or the 5 minutes, I can't say in particular. Well, let's look at it. That was where I was able to, I think it was right here. Now, I knew that this point here, let me zoom out on that a little bit. I knew that this point over here was a smart money trap. So I wasn't looking at this point of interest per se. So people were taking trades off of this, but I wasn't interested in this point. Instead, I had to increase my point of interest here. Anyway, we saw price come into this area, and then we started to see a little bit of accumulation taking place. Looking at the weak to strong hand exchange, there was an FU, price FU'd to the lower side, but still didn't proceed to take this lower or take out the lows here. and immediately after we saw price begin to push to the upside, and this was the trade, and we're looking to hold it right up until it gets into this POI. Alright, so if we're looking for sales, we'll be looking for sales somewhere around here. But however, the opportunities for short-term trades, this is another area to look out for. Not necessarily, I won't call it a point of interest per se. Well, it's a point of interest that I would be personally interested in, to look into trade this area today, see price's reaction once price gets here. So once price gets here, I'll be looking for the reaction of price. I don't just set a POI and price gets to the POI and then we take a move from it. No, this was the Frankfurt Open, so I'll be looking to trade the Frankfurt Open mitigation. I'm not looking for any I'm not looking for price to take out any major liquidity per se, but this is the London session. It's just ranging, it's just gradually pulling to the downside, but not with that much of a momentum. So I'm suspecting it's taking its time to mitigate this imbalance we have over here. So I'll be looking to get involved on this point of interest here. But first of all, I'll look at how price reacts before I'll be taking any form of trade around here. And I explained why this was the Frankfurt Open. If you're not familiar with this concept, I learned this from a friend, Sniper FX. So he explains the concept of the Frankfurt Open mitigation, and it's what I'm looking to trade. If I see, if price reacts the kind of way I'm looking for when it gets into this POI, I will be looking to get involved with the buys around here, and we'll see what this would bring. Entry around here, stop loss somewhere here. 10 pips is fine for me. Don't want to go above that, and I'll be looking to hold price all the way up here. So that's my bias for today, looking at a 1:9 or a 1:10. Yeah, so this is what I'll be looking at for today. So if you have any questions, just drop them in the comment section below, and I'll be answering each and every one of them. Thank you.